Hello, my name is Matthew Kidman and welcome to the latest episode of Success and More Interesting Stuff, brought to you by Livewire Markets. It is rare for a person to spend the first half of their working life in the public service to then pivot and build a multi-billion-dollar financial business. Making the story more remarkable is for that person to grow up in regional Queensland where financial products are hardly the main course of the local economy. Ian Macoun, the Managing Director and founder of Pinnacle Investment Management, was born in Rockhampton, which is best known for its cattle production. He left town to work for the Queensland Treasury before being poached as a 33-year-old to run the newly constructed Queensland Investment Corporation, QIC. It was here that he was introduced to the world of investing. With QIC up and running, Macoun headed to Sydney, joining the private sector. A stint at Westpac opened his eyes to the opportunity of funds management. In 2000, he struck out with Mike Crivelli, forming Perennial Funds Management. It wasn't long though, and Macoun was thinking of an alternative funds management model, taking minority ownerships in multiple managers and providing the onerous back office functions and accessing the key ingredient for any fund manager, funds. He discovered this opportunity at stockbroker Wilson Advisory. Macoun teamed up with Steve Wilson to change his fledgling Hyperion Funds Management arm into a multi-manager model. This was the birth of Pinnacle Investment Management. Today, Pinnacle has been spun out of Wilson's and has 16 affiliates with a staggering $100 billion of total funds under management. It is growing rapidly, and Macoun believes $200 billion is not out of the question. For disclosure purposes, the funds associated with Matthew Kidman own shares in Pinnacle Investment Management. Welcome, Ian.
Thanks, Matthew. Thanks for having me.
Pleasure having you. I know that by the time the listeners hear this, the state of origin would have been decided, but at recording, we've got game 3 to go. So as a Queensland born and bred, but converted New South Welshman, who are you going for and who are you tipping in game 3?
So state of origin means state of origin. That's Queensland. So I'm supporting and tipping Queensland to win.
Well, they always set it up nicely, don't they? Win the first match, don't really care about the second match, and then have the home game in Brisbane.
Yeah, absolutely. Good formula.
Good strategy. We could all learn from that.
Absolutely.
So thanks for coming in today. I'm really excited about this podcast because I've known you and observed you probably better rather than knowing you well for, I think, 25, 26 years. I remember at one stage when I worked at Wilson Asset Management. I don't know if you remember this, and we didn't talk about it previously. You came in to see Jeff.
Yes, I did.
And you were kind of wondering about the world of funds management and where the next turn was. And I can't remember the outcome of that.
Yeah.
But I think it was before you went off with Mike Crivelli. It might have been just after Westpac. Do you remember that?
I was trying to learn everything I can about funds management and talking to anyone who's successful in the field. I do remember.
Oh, good.
Yeah.
Do you remember how it went? Did Jeff have any pearls of wisdom?
He did, actually. I mean, look, it's a matter of just absorbing people's thoughts. I reckon Jeff was ahead of his time in...
Because he would have only been a couple of years in by then.
Yeah.
I remember sitting in on the meeting going, I'm too green to add anything here.
Yeah. And look, we'll get into this, but the industry was dominated then by the traditional banks and life companies and so on. So love talking to Jeff as a bit of an innovator, because that's what I was trying to do as well. And it was really valuable. I remember you too. I remember a book that you wrote about all these star fund managers.
Yeah.
And of course, I was in awe of these people. These are the people I wanted to work with. So I love reading that book of yours.
What do we call them? I remember talking to Steve Wilson. He calls them alpha hunters.
Alpha hunters.
Which we'll get to a bit later, because I think that's what you try and get, alpha hunters.
We do. There's a fine line though. We don't want what we call rockstar fund managers with huge egos and everything dependent on them. But the people we're after need to be very confident and very good at what they do.
So that's interesting, that mix. And so you don't go after rock stars. So you've got to have a good test for what is a rock star.
Yeah.
And how do you test that?
So we spend a lot of time talking to these people. I want to know what their character is, what their vision is for their career and their business and so on. If they talk a lot about I and not a lot about we, that's a big red flag. So some people's egos are just so big that we can't have confidence that they'll sustain excellence. And we can think of a lot of examples of what I'm talking about here.
Funds management's great because people call themselves talent, which is not many industries where the workers in the industry could describe themselves as talent.
But it is talent. That's what it's all about. That's what our whole business model is about, finding and supporting talented people. These people are special. They're rare. And so they're quite precious, but they need a lot of help as well.
No doubt about that. We're not good at everything. And when I say we...
You're one of them, don't worry.
No.
Yes,
when I say we, I'm saying the industry.
Yeah.
But one thing before I leave that, going back to the rugby league analogy, and your I and we, supposedly someone told me that when Craig Bellamy, the Melbourne Storm coach, who has been unbelievably successful in his career, when he's looking to sign a new player... What I've heard is the first thing he does, he meets them and says, let's go for a coffee. Yeah. And when they order the coffee, he observes whether they say, can I have, it might be a flat white, please. If they don't say please, it's one strike. Yeah. And when it's delivered and they don't stop to say thank you to the person, 2 strikes, you're not coming to the Storm.
Yeah. So we want team players, and character is incredibly important. So that's smart of him.
Yep. Yeah. Well, we'll come back into that. Now, I want to go up north to Rockhampton. What's in the water at Rockhampton? We know it's the home of Rod Laver. Yeah. Anna Mears, who is leading the Olympic team. I think she comes from Rockhampton, the cyclist.
Absolutely.
We've had some good business people. Yeah. Bevan Slattery.
Yes.
Came. Graham Wood, who started What If? He came out of Rockhampton. Yeah. And even a High Court Justice, Gerard Brennan. Yes. Who lived in Rockhampton. And yourself. What's going on in Rockhampton, big regional town?
I don't put myself in the category of those people. But, so many people to be proud of from my hometown. The Rocky Rocket, Rod Laver, was a hero of mine when I was growing up. Absolutely. So Rocky provided a certain environment for kids growing up there. And that tended to result in some good character traits in a lot of instances. I'm guessing, I'm generalising a bit here, but there wasn't much in the way of wealth or high incomes in Rocky, and the lifestyle was fairly simple. People valued their families and friends. Parents had time to focus on the kids. Weather was fine year-round. Huge amounts of sport was played, a very outdoor kind of life. But Rocky people don't expect an easy ride in life. No shortcuts. No one's going to come along and do the work for you. You knew that if you were going to achieve success, you'd have to work very hard. You'd have to be persistent. You'd have to be resilient.
I grew up on a farm, which in itself was a bit isolated and restrictive in that sense. But I gather in a town like Rockhampton, in the era you grew up, there was a degree of freedom.
Absolutely.
So you could go and explore the town and the people in the town and what was happening?
Absolutely. And you felt like you were happy. It was just a wonderful lifestyle. I was privileged to grow up in Rocky.
Yeah, regional towns are also interesting. I remember doing a book years and years ago called Master CEOs.
Yes.
And we did 13 interviews with people, and I think 12 of them came from regional towns somewhere and had similar traits to what you're talking about.
Yeah, it can't be a coincidence. There has to be something systemic going on. It doesn't work for everyone, but I think it definitely tends to produce those sort of character traits.
Let's go into the Treasury.
Yeah.
What kind of roles did you play there? And what did you learn, more importantly?
Yeah. So a whole range of different roles. I mean, Treasury was just fantastic. It was regarded as the elite department of the public sector. It was legendary as having extremely high standards, attracting top graduates. Everyone worked extremely hard. Young graduates were on a fast track to big careers, and it was a privilege to be invited. It was a fantastic learning curve. It was run by this guy, Leo Hilscher, Sir Leo Hilscher. If you go to Brisbane, you go across the Sir Leo Hilscher bridges. So
that's probably where I've seen it, because the name rings familiar with me.
Yeah, he was an absolute force of nature, Leo, and so I ended up working directly with him a lot on Greenvale Nickel project, a whole lot of things.
Oh, so individual projects.
Yeah.
And your role was to model some of those projects?
Absolutely. there was just a huge spectrum of big commercial and financial matters that we got exposed to. I mean, Treasury was involved in everything. Big industrial projects, big infrastructure projects. Basically, Leo built an investment bank of the public sector. And we were there right in the middle of all of that. We were forever negotiating with big Australian companies, BHP and so on, big overseas companies. I remember doing the first credit ratings of the state of Queensland. Standard & Poor's and Moody's sent people from New York to do it, and it was a big job. We were moving into issuing paper, Queensland paper overseas. We were sort of virgin, high credit. And
who was your premier? Was it Bajocki Peterson at that stage?
So at that stage, it was Bajocki Peterson, who also was treasurer, but then Mike Ahern as we moved in and I got towards QIC and so on. And then subsequently Labor premiers as well. But yes, Bajocki Peterson was premier for a lot of the time, but we always said in Treasury, we are working for the people of Queensland. We're not working for any particular politicians.
Whatever your view on Joe, my memory of it, I'm slightly younger than yourself, but there was a lot of controversy, but it was a go-ahead place. Things had to be done. We had the Minister for Everything, Russ Hinds.
Absolutely.
But even though corners might have been cut, things were being done.
It was pro-development. This was the 80s by then, the 70s, and then the 80s. It was just huge.
Money was available.
Lots of money. Development was proceeding at an enormous pace. And we were in the middle of all of that. So, that was just great experience for me.
Good learning grade. I didn't realise that in Treasury, I thought all you did was make sure that you had enough foreign currency reserves.
Yeah. No, Queensland Treasury was very different. And, it was out of that I was given the job of figuring out what to do with all this superannuation money, all the money that was available for investing. So it covered a big range.
Oh, that's interesting. So that's the investing side of thing and the savings pool that's coming through.
Yeah.
The interesting switch there with that background, and what you were there for maybe a decade?
So I was 15 and a half years altogether in Queensland Treasury, although the last 2.5 years it was a joint role. I was the head of a pretty big Treasury division, but I was also called Director Investments of Queensland Treasury Corp, which was the forerunner of QIC.
Yep.
And we set up this big high-powered board in early 89.
And how were you seeding that for funding?
So we had about $4 billion, $4 or $5 billion. It was basically the public sector super and workers' comp, etc. That was all managed within Treasury in those days.
Right.
And I was given the job, figure out what to do with this long term. It's growing rapidly, obviously needs to diversify. So I was given that role a few years earlier, and I didn't press the trigger on diversifying, although we knew we were going to do it. I'd done a finance master's at night by then. I certainly knew about.
Where was that at? Where were you doing
Queensland Uni. I did a Master of Financial Management at night. I did CFA later on at Perennial, but I needed to keep studying, but part-time because I wanted to be working full-time. So, I knew about portfolio management and so on, but we didn't press the trigger because, first of all, we had to plan excellence. We wanted to do this once and do it very well. That's what became QIC. Mm-hmm. But also I thought equity valuations were still high. It was when the 87 crash came that I said, right, it's time to start diversifying.
So the equity market, which came to play a big role in your life and continues to do so, you were watching that then?
Absolutely, very, very much so. And I remember Leo was frustrated with me that I hadn't started diversifying more. He'd go to state government insurance office board meetings and see all the money they were making out of equities, and he'd come and get angry with me for being so tardy. But it was the 87 crash.
Oh, so the money that you guys had within Treasury and the vehicle that was transferring eventually into QIC was what, invested in bonds and cash?
It was all in government and semi-government securities.
Okay.
Which was pretty amazing. Although it was all defined benefit money, so there was some logic to that.
Sure.
But we're always going to diversify it.
So there was a bit of FOMO in the ranks.
Well, yeah, but it wasn't a bad time to own bonds. Interest rates were high then, and so we did it progressively, the diversifying. So that's a whole other story. But yes, equities were always going to feature. So I was responsible for that money from July 88. We set up what was called Queensland Treasury Investment Trust, which actually then became the QIC Investment Trust. It was the same money. It was just a continuation. But we set up this board in early 89, and I was supposed to be in this interim role until we got the QIC legislation through, and the board would then select some high-powered chief executive to run QIC, and I'd be back full-time in Treasury, and my ambition was to become head of the Treasury.
And how many steps away from head of Treasury do you think you were?
I was only one, so
it was within reach?
It was definitely within reach. Within a few years, and I was, I was very much on track for that to happen. It was seen that I'd be a good candidate. So Jim Kennedy said to me, look, the board's been thinking about this. We've been looking at candidates. We decided we'd like you to take this job. And I said, Jim, that's very flattering. Thank you. But my heart is set on head of Treasury. In the end, they sort of ambushed me. So Jim sat me down eventually, and there was a certain premier sitting there as well, which we won't go into. And he said, look, Ian, we're going to make you an offer you can't refuse.
I've heard that somewhere else before.
Yeah, absolutely. But I tell you, when Jim Kennedy said it to you, you knew you had to take it seriously.
Great sliding doors moment.
It was. And look, there are a few of those in my career where you look back and you say, oh my goodness, it could have been very different. I mean, I thought perhaps I would stay my whole life as head of Treasury, and I'd have been privileged to have done that, and I would have liked it. But when I went into the QIC job, I just threw myself into it, and I loved it.
So it sounded like given the transition was over those few years from Treasury into QIC, it sounded like it was done quite methodically. So you had a team and you had money, and you were transferring investments into that, were you? It was up and you had a running start.
Yeah, absolutely. So my job was to help the board to go out and recruit people. We were starting from a blank sheet of paper, really, which was fantastic. How many people get that opportunity? And so we recruited experts in Aussie equities, international equities, a lot of real estate. We were able to find, some people came in on a consulting basis, but for example, former AMP real estate people who'd been very good but had been disillusioned somewhat. I mean, our board was a great board. We had people like Alan Coates on it. Mm-hmm. He'd been the head of investments at AMP and then chief executive of AMP for a long time. He was a wonderful mentor to me, and Jim Kennedy was as well. We were able to find these people to come.
Well, it was also a great time. Asset prices by 91 would have been on their knees almost compared to previously and post.
It was perfect, and we were under no pressure to diversify at any particular pace. I mean, one thing that I could do was identify talented people who are the real deal, and we were able to get those kind of people. I could convince them to sign up to the mission, and really that's the same thing that I've been doing for a long time at Pinnacle.
It was great training for what was to come, no doubt. But I find it interesting, you're sitting there head of QIC, you're still quite a young person.
Yeah.
I wouldn't have thought there's too many better jobs in Queensland, but after a period, you leave. Was that on your own volition, or was it something changed that forced you to make a decision?
It was absolutely of my own volition. I loved it at QIC. I had no intention of leaving. It was going extremely well. Everyone was happy. We had a big agenda. We wanted to do so much more. We could see the growth coming was enormous, and I loved it. So I still wonder how I got talked into moving. Another sliding door moment. It was ridiculous. So I said, no intention of leaving. This search guy approached me, and I ignored him. And I remember my assistant came and said, he's been calling for 4 days. He's so persistent. He said it wouldn't hurt to have a quick cup of coffee with him, would it? And I just sort of thought, we're still recruiting. I'd never pay someone like him, it was too expensive. I thought maybe I can pick his brains a bit. So I agreed to
free advice.
Yeah. But then at the end of us sitting down for half an hour or so, he told me it was Westpac. And he said, it's a major repair, a turnaround job.
What year are we in?
So this was 93.
93.
I left QIC to go to Westpac in late 93.
So they would have been still struggling then from the recession?
Yeah, the banks had a terrible problem. They'd put cost cutting through Westpac Investment Management, which had been very good, but they damaged it, and now they had to turn it around. Bob Joss was there. I became part of Bob Joss's sort of turnaround team. But he said to me, do you think you'd be capable of doing that? Restoring it to the high standard that it used to be. He put it as a sort of a challenge to me, which was smart of him. Now, with the benefit of hindsight, I was still naive. Frankly, it was arrogant of me to think, well, if anyone can do it, I think I can. QIC was an important organisation. It was billions. It was going very well. I sort of thought maybe it doesn't need me so much. And as you said, I was 33 when I started there. It was the best job in Brisbane for me by far. So was I going to stay there 30 years in the same job and the same place?
I think you would have got tickets to State of Origin.
Yeah, absolutely. But, that was in my mind. But really, it was the challenge. Was I good enough to do a turnaround successfully? This need to keep pushing myself, to keep testing my limits. It was absolutely stupid and ignorant of me, really. But here's the irony, Matthew. If I hadn't had that Westpac experience, a bank-owned funds management, and then I very nearly took CIO of one of the big life companies job, had to think hard about that. If I hadn't done those, I wouldn't have been so deeply aware of the deficiencies of the traditional funds management ownership model, and I wouldn't have dreamed up this ideal best of both worlds multi-boutique model. So,
just to give us some perspective about size, Westpac Investment Management compared to QIC, what were the funds that you were going from the QIC to Westpac?
I reckon they were broadly similar size. I mean, Westpac was a big, well-respected manager, but QIC had been growing by then as well. They were probably both sort of, I'm guessing, $10 billion. So it was the more commercial nature. It was stepping completely out of the public sector.
To the private sector, as we said in the introduction. That was a big pivot.
That's true. Although QIC was a big change for me as well. I had a commercial board. We were independent of government. And I was the chief executive in my own right. So that was the big step. So I was really lucky that I was able to do this sort of two steps into the private sector.
And did you fix it? That challenge that the headhunter threw down to you?
So, yeah.
And how did you go about that?
Yeah. So I think on any reasonable assessment, we did. We got it back to being investable. Asset consultants were supporting it, etc. But it was owned by a bank. And ultimately, it was clear to me that you could never sustain true excellence in a funds manager owned by a bank or a life company.
Was it any more dynamic than the government or less dynamic?
It was different. I mean, QIC was incredibly dynamic because it was early and we were on a mission. It was different. There were commercial pressures that were very real there that I thought were actually inimical to continue to do an excellent job. But we were all out, we were poaching each other's key people and the clients hated it. So the model was not delivering what the clients wanted. And I knew that. And ultimately, I said to my wife when we started pursuing this multi-boutique idea, I had to earn no salary for a long time, then a low salary, which I was always grateful to her for supporting me. I said, I can have a wonderful career. I can be a heads of funds management business, paid huge amounts of money, you'd be well respected, but deep down I'd know I'm a fraud. No, absolutely. You know you can't deliver what you're promising your clients. And I vowed if I'm going to stay in funds management, I'm going to do it to excellence, and we need this new business model, which didn't exist at the time.
Just to conclude the Westpac experience, towards the end, eventually bought BT.
Yeah.
And that was a step change for them again. And I gather that's where you might have met Mike Crivelli?
No, actually I knew Mike beforehand.
Right. And
So-
Mike had been a BT executive from day one.
Absolutely.
And we've had a few of the BT guys, Olive Rahn and Keir Nielsen, but Mike was there when Chris Corrigan started the whole show.
Absolutely. He was there right from the beginning. And he was very sad about what had happened to BT. He felt that ultimately their business model was flawed. The Australians didn't have equity in the business. So by the time Westpac bought BT, Mike, I think he'd already left or he was leaving. And he and I used to chat about business models. And he and I both came to the conclusion that boutiques, so, you know, people like Keir Nielsen and Portfolio Partners, Maple Brown Abbott, had set up boutiques. You could see the strength of it. But I felt standalone boutiques could be flawed and that people needed more help for the other functions that are very important, had to be done to high standards. So the multi-boutique model was better, and Mike sort of came to the same conclusion. So we agreed together, we're going to go out and do this thing, because what about having a whole career in this industry and ended up with failure? And so let's do something better.
So it's another big move to go out with Perennial, because it's your own business. So you've been in these big institutions, whether it be government, bank. Now it's a step out. And I think where we started the conversation, you came in and you were fact-finding, asking. I'm sure Jeff wasn't the only one. You probably spoke to 100 people.
Yep.
But it was an interesting time, but you probably had a structure in your own head, what works, and I think you've outlined that.
Yes.
But how do you start your own business? How did you get up and running?
Yeah. So it was a huge step. We'd been planning it for quite a long time, but we knew we had to find a backer if we were going to do this on scale. So we wanted to do Australia's first multi-boutique. The concept came from our experiences. We knew it'd work, even though it was brand new. We had to go and earn no income for a long time. But I was obsessed with the idea, and so was Mike. And we found a backer. We found IOOF, which was a mutual, friendly society. They were looking to reinvent themselves. So we said to them, well, how about you give us your fund? We will convert your investment units into boutiques, and we'll set up a multi-boutique.
And you become a fund of funds of sorts. Will you be backing?
Yeah. Well, it was this model of, yes, owning stakes in independent boutique businesses.
But IOOF would be seeding these various funds.
Yes, they would seed them. But Mike and I and a couple of other partners would have equity in the business, no incomes, but equity. And then we would go about building more. So that's how, John Murray came and so on.
So you recruited the various different types, and it all sat under the Perennial banner, whether it was Perennial Value.
Correct. At that stage. Now, we ultimately decided that wasn't the best way to go. We had some lessons and learnings out of Perennial. We ended up with people saying they had too much Perennial. And I'd say, no, you don't. You've got Perennial Value and Perennial Growth and Perennial Fixed Interest. Oh, no, too much Perennial. So when we did Pinnacle, we've named all of our boutiques with separate names. And even though there are people out there with, 8 Pinnacle affiliates, because they're different names, they don't actually say we've got too much.
So they know they've got different strategies, which was in Perennial, but it wasn't labelled Pinnacle. We're getting the P's mixed up here a little bit, but a slight pivot in what perception was out to the public.
Yeah. It's silly. It's not rational, but it's a perception thing in the name.
And I think you were 6 or 7 years at Perennial.
Yeah.
And what did you grow it to at that stage? Because you would have got outside funds outside of IOOF.
Absolutely. Look, it was a real success, and it proved the model. It did prove the model, which was terrific. I can't remember how much exactly.
But in the billions?
In the billions, yeah, absolutely. Perennial Value got into the billions quite quickly. And
Mike was head of sales, because that's what he was, the business development manager or the top of that tree at BT.
That was his background. So Mike was executive chairman, and he was focused on distribution, as you say. I was CEO or managing director, and I was responsible for everything else, especially the investment boutiques. That was my job.
And so you're off to a running start there, but something changed.
Yes.
What was it? And we can be as candid as we want, but was it something to do, which is another lesson, with IOOF?
Yes, absolutely. IOOF changed. It demutualised and listed on the ASX, and they formed the view that IOOF should buy out the equity of the executives in Perennial, not in the affiliates, but in Perennial. Now, that was not the model that I'd signed up to or that I believed in. So I sold them my equity and continued my quest to build Australia's leading multi-boutique. I was still on that mission.
And how many of you had equity? Was it a buyout of only a handful?
There were 4 of us.
4?
Including Mike. The others stayed. I mean, Mike was 15 years older than me, and so he wasn't up for another. I mean, this was hard work, going out, finding a backer. It took a lot of time and energy, and we had to. Half of every discussion was saying we think the model will work, and people would say no, the model won't work. Anyway, we did prove that it would work. But Mike stayed there.
Every good business has got to go through that, where people say it won't work.
Oh, absolutely.
Everyone we speak to, it's very similar. There's someone who says, well, you're going to struggle there. It's just that doesn't work.
Yeah. And with the benefit of hindsight, that was good, because it made us so determined, so passionately committed to proving to the world that this model works.
So you'd seen that it could work.
We'd seen enough.
You could do a better model version.
Yes. We saw some things not to do, but we could see that fundamentally it was a good model. And
so the lure of Queensland never leaves. Somehow you end up with Steve Wilson.
Yeah.
And Steve had started his own funds management business, which is another interesting story, because I think originally it was called WAML.
Yes,
which
right.
was in a bit of conflict with Jeff Wilson. And when I started, I remember there was a little bit of conversation between Steve and Jeff.
Yeah.
But smartly, I thought Steve changed then his business to Hyperion, because that's what he had set up. Hyperion Funds Management was becoming a brand in itself, which was quite interesting.
It was. Hyperion was a real success. And Steve approached me to see if I could help to grow it a lot more. It had got to a certain stage, but it needed to become more sort of industrial to grow further.
And for listeners, Wilson's and Steve is very much Queensland based. That's their origins. Steve's one of the establishment in Brisbane.
Absolutely. And people often think I live in Brisbane. I moved 30 years ago to Sydney, but they still think that I'm there. It was a coincidence, although probably they knew me well. Steve and his board took a lot of references on me, and they talked to people like Jim Kennedy, Leo Hilscher, and so on. So that's how they figured out that I was someone they could work with. But they approached me about Hyperion. I pitched the Pinnacle idea to them, and they actually loved it. I mean, I've got to say, Steve Wilson has been a supporter of what we've done from day one. And I made it hard for them. I said, I need independence. I need shareholder agreement guarantee that I'll be able to run this business independently. You won't interfere with it. They gave me that. They gave me capital and backing, and they put Hyperion into it.
Good move by Steve in the long run.
As it turned out. But again, that took a lot of faith, and there were plenty of doubters. There were doubters for a long time.
And Pinnacle, a couple of questions out of that. Where do you get the name from? Because it was a change in name.
Yeah.
And 2, it sat as a bit of a hidden asset within Wilson's for quite a few years.
Well, it took us some time. I mean, the GFC hit 18 months in. We had to be really persistent. We had to persevere. look, I suppose the name is a little bit of arrogance there. I always had this vision that we could sit sort of at the pinnacle of the industry. I mean, it had to start with a P, as you've alluded to.
Confuses me and everyone else, but anyway, Pinnacle it is.
Yeah, I know. But we became listed 2006. We hadn't.
Wilson's did.
Well, no, Wilson's listed very early.
Right.
And we stayed privately held. And as you say, under the radar screen, getting on and building this multi-boutique. We added ResCap, we added Plato and Palisade early, and we were quietly, patiently building it, but we weren't listed. But 2006 was Wilson's. 2016, we were asked to roll up.
Yep.
And so Pinnacle effectively became listed.
And Wilson's came out of it.
Yes.
Yeah. And I always remember that Wilson's a listed vehicle. There was this hidden asset as a small fund manager, but it was always hard to work out how to extract that and see the value. Yeah. So it traded at ridiculously low levels given what was being developed.
I know, but you guys at Wilson's figured that out, and you were early owners of what was then Wilson's.
Yeah, that's right. That was the code.
Which became Pinnacle.
Yeah.
So that was smart.
And so you started to talk about there, you started to attract other managers. And give us the structure and the pitch in those early days. So you had Hyperion, and that became your seed kind of manager, and today it still exists as a very successful outfit. Yeah. But the next lot that you just mentioned then, what was the pitch to the managers, and how did you convince them to come across, and what was the structure you liked to strike?
So the pitch was that for many of the most talented active investment managers, these special people that we talked about earlier, talented people, the best environment for them to achieve true excellence and deliver for their clients was the boutique environment. But a standalone boutique could be fragile. It's far better for these people to own a majority of the equity, but not all of it, in something that can be much stronger. So you're an investment professional, focus on investing. That's the most valuable thing for you to do. We'll do everything else for you if you want us to. We'll do distribution, we'll do all the ops. That has to be done to a high scale. You don't have to worry about that. So that was the pitch, really.
And people liked that?
They loved it.
And what was the proof in the pudding? Because a lot of these structures, whether they be here or offshore, can run into problems down the track when there's been success.
Yeah.
Because the manager, and we go back to the original comments about rockstars or big egos, kind of sit there and go, well, hold on, I've been the one who's delivered the performance. Yeah. I'm the one that they're marketing around. Why don't I own more of this? So there's a natural tension there. How have you been able to avoid that?
So we always knew that was a big risk, and we wanted to make sure that wouldn't happen. Bottom line, you have to do a very good job for the fund managers. There's no doubt about that. So our business model was specifically designed to sustain investment excellence, to be long-term, for there not to be turnover and change. So we deliver this ideal environment for the people, but you have to be sincere about supported independence. Too many of these places, it's kind of like a greed, isn't it? People are aware of their own contributions, less aware of others. So the way we set things up, they can't take away our equity, but they are not forced to use our services. Mm-hmm. So they have a right to do it themselves or get someone else to do it. So it keeps us on top of our game. We have to keep delivering. We have to keep our standard high.
Because they can go elsewhere.
They can go elsewhere. They can't take our equity, but they can go elsewhere if they choose to. So that keeps, it's a kind of a creative tension, a positive, healthy tension that's in the system. But the truth is, we have done a very good job. I mean, we're not perfect, but I think I can claim we're better than most. Mm-hmm. And our affiliate leaders, these talented investment people, they can see that. They see, honestly, other people begging to become Pinnacle affiliates because particularly distribution. Distribution is really hard. And
Well, I think that looking at various structures in a similar vein, the one thing that sticks out to me and why Pinnacle these days trades, I think, on much higher multiple for the local fund managers who, we get the chance to buy you guys because you're listed,
yeah,
is that you're good on distribution.
yeah.
You deliver, which a lot of other structures, I think, have fallen short on that. Do you think that's one of your big distinguishing factors, that you have got great distribution, that if the numbers are good enough, you will raise that money for them?
Yeah. So distribution is really hard to be excellent at it.
Very difficult.
Yeah, I think it's a profession. It's undervalued, whereas we don't undervalue it. We get very good people. We support them very well. And we make sure that everyone is aware that we value our distribution capability. So that was in the plan right from the beginning, because, and it came from our understanding that investment people generally struggle with distribution. And what a tragedy when people do a great job of investing, but their business doesn't really get traction because they're not good at distribution.
I always think that numbers alone will never make you a great business, but you can't grow without good numbers.
Totally.
So the missing link in that little saying is, where's the distribution? Where's the ability to raise the money to take advantage of it?
Investment excellence is necessary but not sufficient.
That's probably a more concise way of saying it, a bit more eloquent than me.
No, but it's amazing how many talented investment people think that as long as they produce the numbers, the clients will come. And of course, it doesn't happen. And it's a great shame.
Source of frustration.
Absolutely. But look, most of the people who've been attracted to our model, they're already experienced. They've already experienced the challenge and the struggle of distribution. So they appreciated what we have to offer.
It's good timing. So let's fast forward to today. As we said, Pinnacle's standalone, and it sits with a market cap of circa $3 billion. It's had a good run lately, which is nice. 16 affiliates with the addition of Royal London, which we'll get to in a minute.
Correct.
So of various types: global equities, domestic equities, private equity, infrastructure, private credit, public credit. There's a whole range.
Absolutely.
But in the introduction, I said you can go from today's 100 billion, and I know it's probably slightly more than that, and we'll find out in the next month or so where you're at.
Yeah.
But I've heard you say there's no reason why we can't get to 200. We've got the infrastructure. It's out there for us. Is there other areas you can go to in terms of segments? Or have you just got the infrastructure now to actually grow within your own vehicles? How do you see it playing out over the next 3, 4, 5 years?
Absolutely. There's a huge amount of asset classes, subclasses, geographies and so on that we're not in yet. So yes, I threw out that 200 billion figure. Actually, we think we can go over time a lot more than that. It's still early days. We think we've got a really terrific model, and we think we can grow that a lot more. Look, our objectives are not particular targets, fund targets. Our objective is investment excellence in a range of areas where there's a need. FUM and profits are outcomes, but we do seek to articulate to shareholders how we think that things will unfold. We think we've got a fantastic platform, and we think that, we can do more. We can deliver more of what clients want to a very high standard. Then we should do it. It's incumbent on us to keep doing that. But there's so much more that we can do.
Well, that's exciting. As a shareholder, it makes me feel good. But let's go into a few of them, and some of them probably more current. So the private debt area is a fairly new asset class in Australia.
Yeah.
And you've obviously at the forefront of that with your holding metrics.
Yes.
And that is a powerhouse now. As last I saw, it was up around 18 billion of assets under management.
Correct.
Talk of a lot more.
Yeah.
As an equity person, debt vehicles always concern me a little.
Yes.
That when quality goes astray and eventually ends up traditionally in the banks or financial institutions.
Yes.
Now it's gone outside that because the banks have pulled in their horns. What's the opportunity there, and does that worry you a little bit? I mean, you've been around, you've seen you've seen the early 90s
Absolutely.
recession, you saw the GFC.
Yeah.
Debt can get everyone into a bit of problem at
Absolutely.
different stages.
So private credit, private debt, it can be dangerous if you're not really good at it. So we were only interested in doing it with people who we felt were very, very talented, experienced bankers. And that's what these Metrics people are. So we're delighted with our partnership with Metrics. We think it can keep growing at a rapid pace. But there's this wonderful confluence. There's big investor demand for it. It's enormous.
At the moment, it's enormous.
Yeah, around the world. We think that is sustainable. That will go on for a very long time. But also the originating assets. That's a huge area with the banks getting out of it. So that all lends itself to enormous growth. So Metrics, we wouldn't partner with them for quite a while because we couldn't get equity in them. But we became so convinced about the talent of the team, the need for what they were offering in the market, that we agreed to do it even without equity. And we ultimately were able to get equity in them, but that's a whole other story. But we think they can grow a lot, and we're very, very supportive of their plans. I think there'll be some failures and some problems in private debt. Some people aren't so experienced, but we've got great confidence in Andrew Lockhart and his team. They're quite risk averse.
Very good. Let's go to Royal London, which is the latest cab off the rank.
Yep.
And that seemed to me, I know you're in North America and you're in other parts of the world, but this seemed to me to be an incredible coup for a relatively, I know you're not small in the local market from global terms, because this group that came out of Royal London have been successful with big lots of money.
Yes.
And here's Pinnacle appearing and striking a deal with them as they go out on their own.
Yeah.
How did that come about?
So the Royal London people are still on garden leave, so they're still employed by Royal London.
We're a bit clear because there's been a lot in the press and you've announced you've done something with them. But
I know, but I'm not able to talk too specifically about that. But look, let's speak generically about it. So why are some of the people who are the best investors in the world in their
terrific
field?
numbers.
Yes, very, very good investors and a lot of commercial success as well. Why are they interested in partnering with us, Pinnacle, Australian-based company? The answer is that people can see what we've done. They can see the success that we've delivered for our existing affiliates, the strength of our distribution, the power of the support that we provide. And they say, that's exactly what we want. Can we partner with you? And we say yes to just a very small minority of the people who suggest that to us. I say only the ones that are truly awesome these days. We say that of the people we talk seriously with, we probably only proceed with about 1 out of 20. We've got to be sure they're the real deal, their character. They've got to be very good investors, and we've got to be convinced they'll sustain it for a very long time. But these people, they talk to our existing affiliates, they see what we've done. I mean, in London, we built Aikya. In 4 years, they have more than $7 billion, and they've got some of the most sophisticated investors in the world invested with them.
So Aikya was a beachhead for you think? That led to...
Yeah.
And Royal London sorted you out? Is that what you... Or was it a meeting of the minds? Or
So, look, let's just say we were very aware of them. We know who the best investors in the world are. And they're also good analysts, and they could figure out what we had to offer. And so definitely there's a meeting of the minds there.
Yeah, very good. Well, and what's your ambition for the Royal London crowd? What do you think you can achieve once it's up and running and...
So, look,
you're down the track 4 or 5 years?
Honestly, Matthew, because they're still on garden leave and so on, I'm not going to say.
But they did manage big numbers at Royal London.
They did. They're very successful, and we've got a lot of faith in them.
Yeah. So I think that might be one of your growth engines. So that's good. A question that you've got the 16 affiliates, and you've said to us that you only select. You can be very selective these days, in particular, given given your suite of existing affiliates. A couple of them haven't worked over time. And how do you deal with that? How do you identify it? And then how do you deal with it?
Yeah. Look, a couple haven't worked. Our success rate is extremely high.
Very good.
But you're right, a couple of them in the end didn't make it. Look, our main strategy, to be honest, is to exert enormous effort to help every affiliate to succeed. You know, we're patient. We don't force change on affiliates. If they're not yet successful and excellent, we seek to convince them to do some things differently, maybe to bring in some other people. Affiliates sort of evolve over time anyway. And we believe that with fund managers, you're better to make adjustments as you go along and not bury issues. There'll always be some changes of people and so on. So
that tells me, Ian, that you don't overstep and tell them what to do, but you stay close to them and assess what's happening?
Absolutely. We see ourselves as trusted advisors, confidants. It's a big part of my job, honestly, is staying close to the leaders of our affiliates. It can be pretty lonely in those kind of roles, and I've had a lot of experience of seeing things go wrong, and I can help suggest ideas for making some change. Normally comes from them anyway, but no, we cannot force anything. And this is something that came out of all of my early career. If people have the power to force something on a fund manager, they'll ultimately use it, and they'll use it at the wrong time. And it might be a bank executive or an insurance company executive or whoever. So we do not have the power to force change on our affiliates. But we're partners. We know them extremely well. We know them as individuals. We're friends. We're there with them every day in the marketplace, in ops. We know everything about them. So if there are any issues emerging, we're there to try to help.
And if it eventually doesn't, or if those changes, that evolution of a group doesn't quite get there, then it sounds like you both arrive at the conclusion it's not working. What are we going to do? How are we going to resolve this? Is that a fair statement?
Yeah, absolutely. So a couple I can think of. One of them, Sigma, we found a new home for them with Azimuth. So we felt that was that would give them some help, the prospect of going on with things. And Dave Adams reached a conclusion. He was a hedge fund, Asian macro, unfortunate timing, etc. And he said, these big super funds keep promising money, but they're not going to deliver it. And I think I should do something else, and we agreed. But look, it's only been a few. We have generally been able to get to success with all of them.
Yeah, it's credit to you to be able to pick and then work with them. Because as you say, they're dynamic businesses, and there's plenty of people involved who do have self-belief.
Yeah.
So there's a fine line between self-belief and too much belief.
There is. But look, the power of our model is it's all about alignment. We're all aligned to get the right results. We know these are people who want to deliver investment excellence for their clients. So we're pulling all in the same direction. Can just have different views how to get there sometimes.
And just bring it back to you, and we could talk for hours, but time's going to beat us on this one. Back to you. It's been a pretty long career. I was interested when you said earlier Mike Crivelli was 15 years older than me and he was ready to go.
Well, he didn't want to move.
Perennial. Or he didn't want to move. So now we fast forward on, and it's 18 years or 19 years since then. You're almost coming up to the 20-year mark with Pinnacle. How do you see yourself in terms of longevity, role in the business?
So, Matthew, Pinnacle being listed, I can only say so much. I'm 69, so my retirement from the full-time role is getting closer. The board, including me, have said this is on our agenda, of course. We promise to do succession very well. The company will absolutely go from strength to strength when I hand over. We'll do that when the time's right for the company, not specifically for me. I myself want only the best for the company. This is my legacy. I won't stay as CEO too long. I believe way too many funds management CEOs, especially founders, stay too long. We can think of lots of examples. They think they're indispensable. In my case, I certainly know otherwise. I've deliberately built a very strong bench of executives, indeed a strong bench throughout the firm. Pinnacle won't miss a beat when I step down.
So I take it from that, you want to retain the culture, and internal promotion in a lot of good businesses at work is the right way to go.
Well, without getting too specific, absolutely we'll be retaining the culture. The culture, the DNA of Pinnacle is everything. That business model is fundamental to what we stand for. There's a book called Built to Last, which we haven't got time to go into, but it talks about a core ideology that must never change. But around that, everything can change. That's how we're going to continue with Pinnacle. Pinnacle should continue for decades, delivering on this supported independence for talented investment people.
And is that how you describe the core ideology? We are here, supported independence. Is that
for the most talented investment professionals?
Yep,
that's it. Absolutely, it's that simple and that hard at the same time. So I'll be around to help in some form or another if that's what's required. But Pinnacle is my legacy, and I want it to keep growing for decades. We think we've built something special.
Terrific. Well, it sounds like you've got a few legacies, given the journey, the kid from Rocky through the Queensland government right up to the financial heights, the pinnacle of Sydney, the home of finance in Australia. So been a fantastic career. As I said, time's got us. I think we could do another show. We could talk about Pinnacle for a bit longer, but we're not allowed to do that.
No.
So thank you. I appreciate your time. Good luck getting to that 200 billion, and good luck in the next little while as Pinnacle goes on its next chapter.
Thanks.
Including yourself.
Thanks, Matthew. It's still exciting.
Thank you.